Hey there, Jason Loucks here, the founder of SecretLender.com. Enjoying the great outdoors here in beautiful South Florida and enjoying the good weather while it lasts. Let me see if I can get myself a little more in focus here. And one of the things that comes up a lot, people come to me for, a bunch of different reasons when they want to get into the real estate business or they want to know more about this real estate thing. And, when people come to me, they usually come to me for kind of like two, sort of three reasons, right? The first reason is they come to me because they want to get started in real estate and they want to do it in this most straightforward, easy, I guess. I don't know. They don't want to reinvent the wheel. They don't want to take the arrows in the back. They don't want to have to suffer. They want to know that if they put in their time and effort, that it's going to work. And the other reason people come to me is they're already doing well. They're already maybe doing some deals here and there. Maybe they're doing a lot of deals. I don't know. And they come to me because they want to, take it up. They want to scale up their business. They want to have a consistent, repeatable business system that just works, flat out works. And not that they have to do every deal's a little different. Every deal's this, every deal's that. They want to be able to string together that Lone Ranger business that we talk about, where basically you are the business. Well, one of the things that happens very quickly, kind of scares a lot of people out of the real estate business, even when they are. Sometimes, the second, remember I said there's three groups. The third group is actually people who are already doing great. They're already doing deals. They're already making money. They're already, usually they're making a full-time income, whether they're doing it full-time hours, probably not, but full-time results, right? Because this is real estate. But one of the things that can happen is people have a hard time sometimes what I call turning the corner. And what I mean by that is, a lot of times people can, get out there and they have their own personal resources, right? So again, I teach a real estate business, so that it's the business's resources that matters, not yours, right? It's not your credit, it's not your money, it's the business's, okay? And when you treat things seriously as a business, you very quickly have to switch gears. And the reason for that is banks will not lend to investors the way that we want them to. In other words, in a number of different ways. Number one, over the last several years, many banks have stopped lending to investors altogether. So there's a lot of banks out there that are not, they just don't do non-owner occupied loans. They don't want to do it. A lot of the ones that do non-owner occupied loans, they require 20, 25, even 30% down in some cases, especially if you have other investment properties already. Banks don't like to back people who have more than 3 or 4 loans. In other words, many banks have a mortgage cap. They won't lend to you. They don't want to be number 4, right? Some of them, the cap is 4. If you have 4 mortgages, they won't make a 5th. Other ones, the cap is 3. They won't make a 4th. And so very quickly, 3 or 4 properties, it's not a bad nest egg or a long-term, 20, 30 years from now, you'll all be all right. It'll be a good supplement to your retirement. But it's not by any means going to keep you, in bread and butter. It's just not a way to make a living. And on top of that, if you need 20 and 30% down for every property, you're dead in the water. On top of that, banks also do not loan on junker, fixer-upper type properties. They just won't loan on those. They don't have the resources to even know that business. They work with the 99% of houses that are in good shape already, where the people are already, moving into a beautiful house. And I mean, how many times have you heard a property failed an inspection and the bank won't lend? Right? They just don't lend on junk properties, so you'd be cutting yourself out of all of those fixer-upper type of deals. Well, the other problem is when you find that out. Sometimes, you get a mortgage, you get 2 mortgages, you get 3 mortgages, you get 4 mortgages. That's what I did in my business. I started off like gangbusters, right? I got it. It clicked for me. And I went, listen, this isn't that hard. Let me go get 20 deals or whatever. I don't know if I had a number in mind. But I very quickly bought 5 properties. Well, as soon as I bought that, the only reason I was able even to get 5 is because the last 2 closed in the same week. So I didn't have those 4 mortgages on my credit where the banks would have shut me off. Well, once the banks find out, I mean, it wasn't a secret. I didn't withhold information at the time. They looked at my credit report, right? And my credit report only had 3, so they were willing to give me number 4. It just happened that I got number 4 and number 5 before anything happened. I did it really fast. Anyway, neither here nor there. This leads people to feel really blocked. They feel blocked. They feel locked out. They say, well, how I see these other people doing it. I see these other people in the real estate field, and they've got, dozens, if not hundreds of units that, how do they do that? And the truth is the funds are available. They are available. They're just not from banks. So, I told you in my world, I had started off very quickly. I got 5 mortgages. I bought 15 units, including 4 multifamily properties and a single family home for myself. As soon as those 5 mortgages hit my credit, the banks wouldn't touch me with a 10-foot pole. I couldn't even refinance the properties I had because remember, nobody wants to do that 5th mortgage. They cap you at 4. So I couldn't even refinance because I already had 5 mortgages, right? So I was dead in the water. I couldn't do any more deals. And, I was really down and out about it. It causes a lot of people to quit the business because they have the mindset of an amateur investor, not a professional. Professional doesn't use banks for their funding. If you don't believe me, go ask them. Right, I'm telling you. Professional investors don't use banks for their financing because banks don't fund professional investors. Banks fund amateurs who want to buy a house to live in, or they want to buy a second home or something like that, not people who are professional investors. So if you want to be a professional investor, you have to get access to the funds. Well, actually, the access to the funds is easier now than ever. There's more of it available than ever, and it's easier to get with less problems. The trick, if you want to call it that, is you've got to be working with private lenders. Private lenders are regular people who have investment capital, IRAs, 401ks, whatever it is, that they want to invest in real estate. In fact, a lot of them are former real estate investors who made their fortune in real estate, so they understand the game, and now they just want to get their money out and working for them, and they want to, collect, they want to, make a loan to you to do the deal. Then you do the deal, you pay them back with interest, and that's how they get paid, okay? So this used to be kind of a hidden world, so to speak, and, many years ago when I figured this out, I thought, this is unbelievable. I know all of these people who they don't want their money in the stock market. They're hardworking professionals who don't have the time to invest themselves, but because they're hardworking professionals, they have a big retirement fund, and currently it's sitting in a IRA, 401k, something else, and they're getting 3-4%, 5% interest if they're lucky, if they're not losing over time, right? If they're not every 10, 12 years they take a big loss and then they hope they can get it back before they have to retire and live on it. It's a serious problem. But nowadays it's wide open. Lots of people are familiar with this. There's a lot of people out there who understand the game. In fact, Tony Robbins is writing like chapters of books about it. And because of that, there's more funds available than ever. But there's a warning, and I have to give you this warning. Because there's more funds available than ever, you need to be more careful than ever. You have to be careful because there's not one kind, there's 3 kinds of private lenders, 3 different kinds of private lenders, and 2 of them you want to avoid like the plague, okay? So the first big issue you're going to run into, the first kind of, sort of masquerading as private lenders, are what I'll call hard money brokers, okay? It's not their money. They claim to know a guy who's got the money, or they know, they're talking about institutional hard money, which is like, a company that makes hard money loans, and they call themselves private lenders. They really do. They don't always call themselves hard money. You have to be very careful about that. And the reason for that is a hard money broker, number one, they're out there looking for you. They're advertising, they're jockeying to get that commission on that loan. They're working hard daily to find investors like us that want to borrow their money. Well, here's the problem. First and foremost, because they're, sort of beating the streets, there's a lot of people who want to use that money. So they get that money out and working very, very quickly. And those types of funds generally don't have hundreds of millions of dollars. They have smaller amounts of money, and they run out of money. The other problem is nowadays they require good credit and down payments. The least I've ever seen as a down payment was $5,000, but even with those loans, they expect you to come out of pocket for all the repair money. So they won't lend you the repair money. They won't lend you more than enough to do the deal so you can afford the carrying costs. And they require good credit, down payments, and all that stuff, which is why we didn't want banks in the first place. Okay, the only good news is they'll loan on junk houses, but that's hardly a help if you can't afford to do any of those deals because you're trying to turn that corner, right? You have to sell a few before you're flush and you can use your own capital if you choose. And you may never choose to use your own capital. The second type of private lenders are what I call existing private lenders. Now, I don't have a problem with existing private lenders. The problem isn't the lenders necessarily. Sometimes it is. Some of them are kind of shady and a little predatory. But that's not usually the problem. Usually the problem is existing private lenders. There's 2 main problems. The number one problem is they're already set in their ways. they've lent money to other people before. They know how they want you to pay them back. They know what interest rates they want. They know they're competitive. In other words, they charge a lot. They charge a lot of points, a lot of fees, and they really stick it to you because they know the drill and they've been around the block and they're existing investors and they're competitive, right? I mean, wouldn't you want to get the highest interest rate you could if you didn't know the people borrowing from you, right? So that's not great. You end up paying more. A lot of times they have lots of requirements. Some of them want to see you. And the bigger problem is because they're set in their ways, a lot of them won't loan to beginners. A lot of them already have an existing stable, they call it, a stable of investors who use their money and keep it churning. That's the industry term for borrowing it, paying it back with interest, borrow it, pay it back with interest. And every time that private lender makes money, right? So they already have an existing stable of lenders. They're already set in their ways, and a lot of them will not lend to investors. And the ones who do usually are charging a lot more points and fees and all that other good stuff. Well, that's the number one problem. Here's the number two problem. This is what I ran into because I'm serious. I'm legit. I'm in the business. I'm not a one-timer. I'm not a two-timer. I've been doing this for years, right? And so the problem that I would run into is I'd talk to these existing private lenders, and they would say, yes, they want to lend. We'd agree on rate and term. It was high, but I was willing to pay it because the profits were still there. And then I would actually go get the deal under contract, call them up and say, okay, I'm ready. And they'd say, sorry, my money's all lent out. I don't have any money left because they have that existing pool of borrowers. So they have investors who want to use their money. And because they have investors who want to use their money, just because they said they wanted to lend to you doesn't mean when the time actually comes, the funds are going to be there for them to close. Because if they're just one person, they don't have those deep pockets like institutional lenders. And that's why the institutional lenders charge 2, 3, 4 points and 10%, and they want $5,000 down, and they want good credit, and you got to pay your own repairs, all that stuff. Well, it's because they have deep pockets. They have more money to lend, so they can be more picky. The existing private lenders, they don't have that much money oftentimes. Some of them do. I mean, some of them are high-level executives or whatever, but most of them are, they're deep pockets, former real estate investors, or they're deep pockets professionals who know the game. They're professional investors, okay? So it's not the worst thing in the world to work with them because at least they can get you that proof of funds, but when the time comes, you just never know they're going to be able to close, and because of that, you end up in a bad position. You end up making offers that can't close because they don't have the cash to close like they said they were going to. Well, the third type of private lender, that's what I call the millionaire makers. Those millionaire makers are what I call secret lenders. They're secret lenders because nobody else knows about them. They're people that you bring into the fold. They're people that you find that are not private lenders now, but are the perfect people to become private lenders. And so it's very easy to explain it to them. Again, get them Tony Robbins' book where he's saying, hey, you should make private loans, right? There's a lot of different ways to do it. Now, here's the thing. You cannot go after those people and start saying, listen, I'll borrow money, I'll pay you back and pay you interest and everything else. That's against the rules. You can't do it. The SEC, the Securities and Exchange Commission, has specific rules on how you have to approach these people. But once you can approach these secret lenders, once you know how, I mean, it's a brain problem. It's not a marketing problem. They're everywhere. They're easy to find. The people who want to do this are, we run 3 different systems for them, and I raised, $3 million in funds available in less than 6 months. And so it's a very, very straightforward process. However, it is a process. You cannot just go out there and start telling people, hey, I want to borrow your money. I'll pay you back with interest. No, you can't do that. The SEC says so. It's not my rules. It's their rules. Anyway, it's also, by the way, why a list of existing private lenders or a list of private lender leads is basically totally worthless because you're not allowed to contact those people anyway. So the guys selling you the lists know this, but they want to get your money, so they're not going to tell you, hey, here's a list of people you're not legally allowed to call. They're just not going to tell you that, okay? It's true. It's legally true, but they'll never tell you because then they won't get your $100, $200, $500 or whatever for leads or lists, right? So be very, very careful with that. But once you tap into these secret lenders, here's the most amazing thing. When I found my first lender, it was a woman who said, I've got this money to lend. She was nervous, of course. I was a little bit nervous, to be honest. It was the first time I'd ever used anybody else's money. She lent me the money. I paid her back with interest, and she said, wait a minute. I actually have this other investment account that has even more money. Do you think you could use that extra money? I said, well, let me go get some more deals. I'll see what I can do. And in 2 or 3 months, I had borrowed out that other investment capital, paid her again with interest over several months and doing deals, paid her back once the property sold. And she said, well, I also have this other investment capital. oops, I forgot to mention to you, of course, she's trying me out, right? So worked once with a small loan, worked again with what I'll say kind of a medium-sized loan, worked again with a very big loan. After 3 times that I paid her back with interest, just like I said it was gonna, she said, I told my brother about you. And of course, she was older, so her brother was 50s or 60, I don't know, older gentleman, had time to accumulate some wealth. And he told his brother, and the two of them together talked to their other brother, and just from that, I had $880,000 in available funds from those 3 lenders that came from one lender that I did right 3 times, and then on the 3rd time, it was like the floodgates opened, and she told all of her family about it. She was like, no, it's legit. He's borrowed and paid it back, borrowed and paid it back, borrowed and paid it back. And that's what we call a lender referral system. So once you find those secret lenders and you prove yourself to them, I mean, you can't just go out there swinging and making up stories and all that other garbage that your so-called competition's probably going to try. They're the best lenders. And they're the best lenders because they're not set in their ways. If you pay them a generous but believable interest rate, all you got to beat is whatever they're invested in now. You don't have to, you don't have to pay, 5 points and 15% or whatever it used to be like years ago. And they're loyal, right? They don't bite the hand that feeds them. They don't, they dance with the one who brought them, however you want to say it, right? If you do right by them, they're going to stick with you, and they're going to stick with you because they're more concerned about getting a safe investment than about getting the biggest possible return. They want it to not go down when the stock market crashes and pay a consistent, believable return over and over again. And because of churn, when you can do your deals fast, the way that I teach, of course, but when you can do your deals fast, you can take a small amount of money, 1 lender, 2 lenders worth of money, and turn it over and over and over and over again, the same fund. So you don't necessarily need millions of dollars in investment capital. If you're going to do, say, 2 deals at a time, you only need 2 deals worth of capital. And then as soon as you sell one, they're going to want you to get their money out and work and go buy another one. Does that make sense at all? All right. Anyway, so if this is what you like, I highly recommend you avoid hard money brokers, hard money lenders altogether. There's just too much nonsense. They never close. I shouldn't say never. I'm sure it must have happened at least once because somebody believes they're going to close. And existing private lenders, I don't have a problem with them, but they're set in their ways. They already have an existing pool of lenders, and just too often they don't have the cash to close when the time comes. And so I suggest you go with secret lenders who are not set in their ways and don't have a whole bunch of other investors they work with. So you're not having to compete on interest rate. You're not having to compete on points. You're not having to compete against anybody but mutual funds, stock market crap, 5%, 6% returns with huge risk. We can totally destroy that. We can give them much better than 6% if we want to. You know what I mean? And we can do it without the hideous downside of any minute now you're going to lose 50% of your value, right? Historically, how often does the stock market crash? Every 10, 15 years, right? So if this is the kind of video you like, I hope that helps. And I hope now you kind of know how to navigate the world of private money. And if this is valuable to you, if this was what you wanted to know, this kind of stuff, feel free to share this. Thank you very much. Again, I'm Jason Loucks. And if you want to visit, you can visit secretlender.com. Talk to you soon.